What's happening? Oh, there it goes. Okay, we are live.
Are we? Okay.
I believe. Yes.
Do we have any?
Maybe.
Do we have any questions from last week?
Nope. I looked. We got nada.
No questions.
And everybody's super silent. Stealth mode ninjas.
Nobody likes to talk.
No, they just want to stalk in the shadows. That's fine.
It
Don't
works
care.
for me.
Introverts, power to you. We get it. All right. So, yet another one of my crazy tabs open everywhere. So for next week, we are doing, I always forget, 10th?
10th through the 17th.
Through the 17th. I don't know why that always screws stuff up. It's like airport, air flight, traveling, thingamajobs.
Mm-hmm.
All right.
What do we got here? Let's see.
6th month will be a no-go, yes?
6 months is a no-go. AT&T.
ERC, shouldn't that be on there?
No.
Really? Or am I confusing that with a different
one? You can tell
one?
by the monthly dividend, and it's not like the the one below it might be better. ERH.
All right. ERH. We sticking that one on?
Yeah, do ERH.
All right. ERH. Ticker. Caps lock. ERH. Let's see if I can not suck
So we get
today.
to go through this boring process with you guys again.
Every week.
ECCs should be pretty good.
ECC, we know for sure.
And do HRL because that's a pretty big dividend for.
You're mumbling.
It's a pretty big dividend.
HRL.
HRL, yeah, that's a pretty big dividend for a dividend aristocrat.
You're still mumbling.
How am I mumbling? I'm fucking talking.
You were.
Oh my god.
You're just tired, aren't you? Lizard Global.
Try it, like I said, LGI, but I think that's a closed-ended fund. That's not going to be something we keep. But
Well, should we just verify that?
yeah, you can.
Yeah, we can. No.
Do EDF.
EDF. Oh my god. I'm sorry, guys. I forgot to freaking share the damn screen.
EDF because the
Sucking.
emerging markets, I still
So
believe
let's go
are
back
gonna
up here
have
real
pretty,
quick.
pretty banging.
We didn't do any of that crap. We did ECC.
We did ERH, which was up top.
Did we do ERH?
Yes, it's a
ERH, okay.
utility fund.
ECC, and then we did HRL.
HRL, that's a dividend aristocrat or king or some shit.
Yeah, I would imagine around the 5% mark. LGI we threw in there just for shits and giggles. And you wanted EDF?
EDF, right. Emerging market's going to be pretty banging.
Okay, EDF.
Then I can see two more right off the bat. I want to see if you pick them.
Ooh.
That's one of them.
UVV?
Yes.
Thought you weren't going to tell me. Verizon, obviously.
And Verizon's one of the other. Yep.
And that one's too low for this, right?
And that's not bad, AIO, but I know that one's overvalued because it's an artificial intelligence closed-ended fund, so I don't really have to look it up.
So talk on that one if you know
Easy.
anything about it.
Well, it's one that I've followed like pretty extensively the last year, and like it's overvalued by about 12% around there. So like
Doesn't that change, though, based on sentiments and stuff?
No, they're closed-ended funds.
Oh, okay. I didn't realize closed-ended fund. You didn't say closed-ended fund.
But you can go look it up if you want. Just like we can pull up one that we know is definitely closed-ended fund. Just do AIO. It'll definitely be overvalued.
Okay.
In case people are new or they don't remember.
You said that other one probably is one. NCZ.
If I was going to do any of them, it would be that one right there because those are all from the same company, Virtuous, and the 18 cents is only 8%, so that's the one I look at.
That one?
No, ACV.
Oh. ACV.
Because I understand like most people's knee-jerk reaction when they need money is to go for like the highest yielding things, but like just looking at that group, like that block right there of like 6 or so, I'll take the 8% yield because it looks like it has the highest dividend and the lowest yield, so that's intriguing to me. I have to investigate that further. Now we're on to Tuesday. I know RQI is one that's undervalued, but I don't particularly like that one. But other people might.
You want to add it then?
Yeah.
RQI. Cohen and Shears REIT.
Yeah, that's again. Like you see, there's a block of like 7 or 8 of those right there.
Okay, so which one would you pick?
I'd probably do that. I know UTF's overvalued. That's infrastructure and utilities.
Okay.
But I probably would do that one right there. LDP. It's 13 cents. It's 7%. Like that's
Same thought process.
Looks like
LDP.
Looks like a sweet spot. RQI and LDP.
RQI. Okay.
Like once you do this more, you'll actually understand like the sweet spots with these things. Like obviously there's ones that yield more. Like right, that one up there is 9% yield, but it only pays 9 cents a month. That's RQI. We're gonna look it up just so you guys can see like how undervalued it is. I personally think it's garbage, but I'm in the minority.
But when you go through this every week, you start to see no.
See now right there, prime example. Those 2 double lines right there, DSL and DLY. They pay about the same, and one's like 2.5, like 2.2% lower. So I would actually look up DLY, whereas most people would go DSL. Now, Frankie and Alex, the van lifers that I help with their portfolio, they actually have DSL, and
not impressed.
It's done okay. It's been she's had it for 3 years now.
There's MSM again. I swore we just talked about that one. Winnebango. What is that, Quagmire? That's awesome.
Now you got right down there. You see two interesting or 3 interesting ones right there.
Arbor Trust.
Yeah, if you don't believe in, like, I'm a big proponent of Arbor Realty as a stock, ABR.
Mm-hmm.
But if you don't believe in it, you can get like a 9% preferred share right there. Oh, ARR, yeah, that's a good one. R, makes it R. And Buckle has a...
So we're just putting ARR. We're not doing the preferreds of...
No.
Okay, didn't think so.
Now Buckle right there, see that $3 special dividend paid out the same day as their normal dividend of 35 cents. That's interesting. So we're going to look that one up. Just BKE.
What am I doing? Weird things.
BKE.
Shush.
I don't like it, but we'll look it up because it looks interesting. That one's CSWC.
Capital Southwest.
Yeah, Capital Southwest is like one of the better BDCs.
Oh, now they're vacuuming.
Yeah, so if there's noise,
so loud
it's not
in
my
this
fault.
house.
Now those two there, a lot of people get into CRF and CLM.
We have talked about these before.
They yield a lot, but they cut their dividend.
Is this the one that kept tracking down and you just didn't like?
I don't like the trajectory of that. They will.
Do you want to look one up for that?
We can look
chart?
it up so we can show them. Yeah, just do CLM. They hold good things. You think it would be a better closing to fund, but
it holds good things. Good things.
And then right there, let's see, we have GUT's a utility.
Gabelli.
That GGT. What the hell? That's a pretty fucking high yield. Look at that one.
Do you want to look that one?
Yeah, GGT.
GGT?
Good game, Tim.
Good game, Tim.
GGT.
I should call you GGT. Oh, that's hilarious.
Now, we actually hold GNT in the van life portfolio.
We putting that on here?
Yeah, we can put it in there. I'll show them why.
What's Gameco?
That's another gold one, but like I went with the higher pay one, so GNT.
GNT.
Yeah.
Joff. Joff. You said GNT?
GNT.
Sorry, my brain just like died.
And then we actually hold MBXG, so we put that on there, so I'll show them that that's overvalued.
Okay, MBXG. Newberg.
I actually kind of like that Joff, actually.
You want to look at Joff, too?
Yeah.
Joff and NXBG?
Yeah. MBX.
That is not a Joff. Joff? Oh my god, I did it twice.
What the hell, man?
My key things are starting to wear off. I can't see. At NBXG. Oh, I got that one on the first try, even though like half those letters are gone.
Yay! A lot of people will actually do that one right there, but that we don't have to look that up. That OCCI is just absolute yield trap. Don't even bother looking at that one.
Trappity trap. Pepco.
No.
Pepco. Sorry, I got a little confused with other thing. PGZ.
Now PGZ might be interesting. We'll put that one on there. We can look at what they hold.
Okay.
SPMC we just sold out of, so we'll put that on there so you can see why we sold out of it.
PGZ. Which one?
SPMC.
SPMC. Okay.
We actually just traded that one in for MSIF. Then one of my favorite.
Trin.
One of my favorite. Trin. TRIN. Lots of BDCs on here.
Yeah, right.
M rates.
Lots
SRV is one we hold. That one's pretty good.
SRV's
So
going
put
on.
that one on there. No, that was another yield trap. HRZN's a yield trap.
What were we just saying?
What? SRV.
SRV.
What are you?
I don't know. I'm obviously tired. Horizon.
That's a yield trap. We were actually in that 3 years ago, and it doesn't perform as well as you think it would.
Horizon.
Yeah.
Okay.
Now here's one that's
An XG.
not actually a yield trap. Like I believe it is OXLC. 32% seems like ridiculous, but I'll show you why that's not terrible.
OXLC.
OXLC.
So I didn't miss anything.
No.
Okay.
And PDCC is another BDC, but we already have enough of those. Is this Friday? Yeah, this is Friday. So
Pearl Driver.
we put PDCC on there. I think
Okay.
that'll be it for the list.
Yep.
Yeah.
That looks like it for me.
Yeah, PDCC.
PDCC.
Our
So
Schwabi,
we got a lot this week.
our Schwabi to look at.
ERH is numero uno. Where are we?
No.
ERH.
Look at our account doing what it's supposed to.
Doing what it's supposed to. Oh, that's why it looks so crazy year to date.
Yeah, it's literally just shot straight up the last 2 days. It was nice.
Well, end of the year rollover.
ERH. Click on it.
Una momento, por favor.
People don't have time for this.
Oh my god.
What are you?
I am doing stuff. Get off.
Stop being ADHD and just stick to
I'm not being ADHD. Give me crap. I'll kill you.
Right away, we can see that it's trading 52-week range. It's about half. It's about middle of the pack there. That's
Oh, not that. We went last year, right?
a 1 year, yeah. The last year, yeah.
Where the hell's the 1 year mark?
In the last year.
It's a weird way. Why couldn't it just say 1 year?
So I think
Look at that
one
chart.
is that one's probably going to be a cunt hair overvalued. But
Overvalued?
We'll check it out.
Where's our...
Here's what they hold. You see there, NEE, CEG. So it holds a bunch of really good companies.
Knee screwed us.
And VST is another good one. So it holds a bunch of good shit. So that's good.
So 8-cent dividend
8 cents a
monthly.
month. And here's where we have to go down here.
All right, here's where I get confused on these. Okay, so we want 1 year
794. You wanted to do since inception.
or 794.
Right there. It says right there.
Oh, okay, 794, and then we have since inception. Negative 1660,
No, you want the average.
which is negative 0.43.
Yep. So this one's undervalued. So it's about 10%-ish undervalued. So this is one that we can look at. So put it on the list. Type it in.
What do I do? 10%.
10%. Undervalued. Whoa, what are you yelling about?
There has to be a better way for this. I probably didn't spell it right. Okay. 10% undervalued. What do I need from this? Nothing.
Dividend 0.8. So like this is like if you're in this one, obviously after like 3 months, it's going to be 0.9, so you can keep up with it. But
What's the yield? Is it on here?
8.12.
8.12. I didn't realize that was a distribution rate. We have no profit margin, right?
Dates on there as well. Yeah, there's no profit margin. Not closing the funds.
Okay, date is the 2nd. No, the 11th.
No. We have to go back into the actual chart because it looks like we got some crazy shit. Because it's already this will be for the 10th, so you have to go back into the chart and see what the investing thing and see what they're saying.
What investing thing?
And investing.com or our dividend calendar.
The one I closed.
Yeah.
Oh, why do I always shoot myself in the foot?
See why there's a discrepancy there. It says the 2nd, so.
It does say the 2nd, but couldn't that have been a different month?
No, because it said on here, it said.
Well, if I did the thing wrong, we said 10 to the 17th, right?
Remember we said last week that there'll be plenty of time to dump your cash because last week's list wasn't that great.
ERH, January 12th. Maybe it's just a typo.
Yeah, so I don't know. Go into Schwab. That's crazy why Schwab has the 11th.
Where do you want me to go into?
Scroll down there again.
I said the second. So I said maybe it's a typo.
Oh, okay. So yeah, it'd be the previous X date was 12/11. This one's 1/12. So okay, that makes sense. All right. And I'll show you a quick way to actually evaluate what the buy-up point is for closing the funds here in a second.
Okay, I feel like I'm lost, so you'll have to.
So the
1180.
Price is 1180 currently.
Okay.
Now you can either go back into Schwab once, scroll all the way to the bottom. You can either go with the 1285, which is the NAV price, but you have to remember that it trades at a discount. Now you get away with that in this one because its historical discount since inception was like 0.43, so it's about the same. Or you can go back into our chart, pull up our calculator.
What chart?
Our chart we're typing into. Pull up the calculator once. Take 1180 times, so it would be 10% undervalued. So it was at 118.
1180 by what?
Times 0.1.
Really?
Then you subtract that from
Subtract it or add it?
Add it to 1180.
1298.
1298 is the buy-up point if you believe in it's 10% undervalued. So you can either do the 1285, which
I
is
see
at
what
the
you did.
bottom
Okay.
there.
Well, that's pretty close. 1285. 1298.
Mm-hmm.
I think this is probably more accurate based on what you were saying, unless your methodology is cuckoo nuts.
Probably. Probably is cuckoo nuts. Now we're doing ECC. I know that this one's like a lot of people's favorites. Like I get questions about this one quite frequently, actually.
Eagle. As cheap as that is.
Yeah,
Whoa.
it's almost a penny stock.
Right? What the hell's going on here? That's just tracking down.
It has a horrible chart.
Did we get out of this?
Years ago.
Is this another? It is, isn't it? Ah. Okay, so what are we looking at? Horrible track down.
Horrible track down.
Some random crap there.
But
Stocks.
it has a bunch of good bonds, so it looks like it's a bond.
Closing a fund. 14 cent monthly. I don't know why that says next payday, January 30th.
That's when you get paid.
Oh, the ex-Dividend date. Gotcha.
So this is 2.21 since inception.
2.21 and 1069.
So if you believe that, this one's about 15% undervalued, but I don't believe that just looking at that chart.
Right. So we're going to nix it.
Yeah, that chart.
Just because of the price of this and the chart.
That chart's scary.
Yeah, I would have to agree with
Because
you
normally
on
if you
that.
pull out to the
I was actually going to say
3-year,
3 year.
it traded in a band for a while and then it stopped. And now once it broke through the band, I guess that's the support or resistance. I don't know what the bottom is.
Resistance.
Once it broke through the resistance, it just free falled.
Or I guess support. Supports the bottom.
But it traded in a band for a while. So when we talked about this one previously, I was like, as long as it stays in the band, you're good to go. But this one's no longer in the band. It fell out of the band, it looks like. And
All right, bye-bye.
When did it fall out of the band? It looks like it fell out of the band right after that dividend right there.
You mean here?
Like right that's like that's still in the band, so right after that.
So the beginning of the year.
So the beginning of last year it fell out of the band and it spent the whole year going down. Now bonds had a fun ride last year.
Ride to the bottom.
Bonds should be okay this year. That's why we actually picked up PDI. We did talk about that in the podcast, but not in.
Yeah, if you're looking for bonds, there's better things to get in. PDI, and it's down now, right?
No, it's not down. It's up. It's up in the last 30 days, but it's at a good buy price still.
Sure, yeah. $22.99, looking a little better.
This one had a rough end of the year.
Yeah, it did. Look at that cliff dry. I actually want to see this. Ugh.
That's kind of gross.
Yeah, I don't like that either.
But
okay.
Let's see what
Argus. Oh, we have an LSEG. Maintain a current price target of 27.9. You sure about that?
So it's
allegedly undervalued. Of course, it's undervalued. It's dropping off a cliffside. 29 cents quarterly. 32. So that makes it.
Yeah.
4 PE. Okay.
15.6 is good. has good profit margin. It has projected EPS growth. So I would actually type into Google Bar once
Google Bar?
what HRL's dividend growth streak is. Just to verify that it is in fact dividend aristocrat. 60-year dividend.
That's a king.
Okay.
50 plus is king. Where the hell are you getting aristocrat?
Back into Schwab. Make sure it can cover its dividends, so go in the dividend tab.
Divvy. Where am I at?
Scroll up into the dividend tab. Scroll up.
Is this different than normal?
Right there.
Oh, okay. Sorry.
So you see the dividend growth. It's pretty sick. Look at that.
Should have clicked on that before.
So scroll down. I want to make sure they can cover it.
We're looking for that
Payout ratio of 133.64.
That's high, isn't it?
Yes, that is high. So there's a
discrepancy.
So we have to go back into their revenue and debt chart to see.
I didn't see anything down there. That's what I was actually looking for. It was like blanks.
It's right there.
Oh, now it's showing. It wasn't there before.
So they actually have shrank their debt. Look at their revenue. See if their revenue increased. And the revenue is about where it was in 2023.
It's been about the same for the last 4 or 5 years.
Yeah, that one's off. Nix it. That payout rate's too high. I can't actually, in good conscience,
get in something that could
recommend.
Could
say, hey, get into something that they're probably going to cut the dividend and the stock's going to tank its face off.
All right, LGI, Lizard. You said this one's probably going to be whatever, 1778.
That's a good chart.
It's a better chart, yeah.
For close into the phone, that's a really good chart.
I'm actually, again, curious about 3.
Yeah, that's a really good chart. So consolidated and shot up.
Whoa. You didn't want to put this one on the list. You so funny.
Now you see what it's holding.
Apple, Microsoft, Amazon, Trixie.
So that's good. Good.
10% monthly, 10% distribution. Down here at the premium to discount. So for the year is negative 6.41.
Current.
Whatever.
1 year is 6.7. So this one's over. This one's actually overvalued. And that's what I was thinking. So if you look at the 1 year again, it looks like this one is fair valued. It's like, okay, if you get into it, you're going to get the 10% yield or whatever it is, and it's fair value. But if you actually, with closed-ended funds, you have to look at the since inception, because that's the average since it was. Let me scroll up to like when it was.
Well, it would be overvalued based on, because since inception is negative 10, so this would have to drop 4% to actually be. So
scroll down a little bit. Stop going so fast.
I didn't know what you were looking for.
So since it's been around since 2004, so that's 21, almost 22 years of data. So like if they're over the 22 years, it's actually had a 10% discount, and now it currently has a 6.5% discount, which means it's overvalued.
Well, and the chart kind of corroborates that whole story. So we're gonna nix it because of overvalue.
Yeah.
All right, makes sense to me. EDF.
That's one of the best things about closed-ended funds. You literally can just scroll down to the bottom and like instantaneously know if you have to do any more research or not. Okay.
Nuclear ETFs. What crazy this week? Thoughts for growth for the rest of the year.
Nuclear ETFs. Depending on the nuclear ETF, like what we actually did in the retirement accounts, we went into NLR because NLR holds like a lot of the nuclear stocks, and I know there are individual stocks out there, but I didn't feel like doing the research on all the nuclear stocks, so I just went into a ETF or closed-ended fund.
We're playing the odds of not getting the ones that actually took off, and we did really, really well with NLR.
But I think nuclear is going to be a pretty hot sector for like probably the next 5 years. Give us 1 second, and we'll actually go into NLR so you can see what we're talking about.
You want to just do that right now?
No, finish. Go to scroll down.
We literally just started this one.
Okay, NLR.
Like, we're already on topic. I don't want to ADHD that way. So NLR. And how much did we make in this one? I think we actually got 100%.
We pulled our initial investment out.
Yeah, so we actually had 100% gain on this one, I think, for 2025.
Yeah, but you see, like there, it's all 5-star. Morningstar really likes this one. They got a hard on for it. And we actually did sell up over there when it was around one of those two peaks right there.
We're on one of those two peaks.
One of those two mountains there that look like boobies.
So you got out of this, or we just took our initial out?
We took our initial out and just let it go when it's going. But like what I want to show you is, if you're not from, like if you don't know what nuclear stock you may want to invest in.
Oh, find one of these and look at what
find
they
one
have.
of these and like look at what they have. They hold all the best. I know a lot of people think that that Camco is like a C something other. I don't know what it is.
Camco.
That first one.
Oh, Camco.
Camco. A lot of people think that's a really good one, but I like CEG. It just doesn't pay a dividend for me, so I don't like it. And what you're going to find with most of the nuclear ETFs, you're basically just doing it. You're investing for a price appreciation because their yields are like between 1% and 3%.
Mm-hmm. And even NLRs is really, really low, isn't it? Only like
it's 1%.
Yeah, it's going to say 1 or 2%.
But I like them.
You.
I like that one there. Actually,
Quad U
is actually pretty sick.
EU.
Yeah, so like I like them.
So that's an easy way to find.
That's an easy way to find stocks if you want to like get ideas
for nuclear.
Yeah.
All right.
Back to EDF.
EDF. Couldn't remember what it was, even though you just said it at my face. EDF. Right.
So
Virtuous
this one
stone.
doesn't like. I like it. That's $5. That's pretty fun.
That's like right at the border of penny.
Looks like it's traded sideways. It's like consolidating there.
Again, this is another one I want to see the full 3 year because
that's been consolidating for a while.
Ooh, look at that.
I like that. I like that a lot.
I don't know what happened right there, but
like that a lot.
Okay.
And
is this another? Yeah.
So there it is.
Fund.
It has like it invests in the lot. You just notice how it's an emerging market. It's closing the funds and it invests in a lot of
Egypt,
different
Argentina.
countries. This one's actually pretty
Buenos
sick.
Aires. Yeah, this might be one of the weird ones.
Yields 14%.
6 cent monthly.
So that's pretty good.
14. Yeah, that's really good for this.
I do believe it's going to be overvalued, but
maybe, probably, maybe.
Let's do since inception.
Okay, so negative 0.2. Since inception, 6.95.
Okay, scroll up to the top and look when it closing fund was incepted. So
10.
15 years. All right, put it on the list.
Oh, did I find one?
I told you that one.
Oh, I'm confusing that with the lizard one.
Because I think emerging markets are going to be hot. They were really good in 2025, and I do believe they're going to be really good in 2026 and probably 2027. So I think you got like a 3-year window where emerging markets are going to be really good.
What was your undervaluing?
It's 5% undervalued.
Oh my gosh. I'm just going to do that for right now. It's hard for me to type. Okay.
112.
112? Okay, 112.
112.
Current price.
502.
Okay, and buy up to? Do I add the 5%?
Yep, 5%, then add it to 502. So what you're doing, like, so that doesn't seem like something that you want to get into because you're only going to be making 5% price appreciation, but you have to couple that with the 14.5% dividend. So you could do it, in theory, you should make between 15 and 20% on this one this year.
Okay.
So that's a sick one.
You're calling that yield protection, right?
Yield protection. They call it yield cushion. I've heard some people refer to it as yield cushion.
I think we called it safety margin too. UVV.
I think this one's not good, but
UVV.
If I remember correctly, I think this one's not good.
Oh, wrong way. Jesus. Wow.
What are you doing?
I don't know.
Just stick between Schwab and the chart. Why do you keep clicking on it?
Because I don't know how to track comments while we're live, and I don't know how to do it on my phone because my phone doesn't work.
We'll check in and then from time to time.
That's what I just tried to do. Don't give me sass. $52.99. That's a big one, expensive one. Look at that chart.
It's consolidated, so that's good.
Again, just because this was so freaking whatever. Ooh.
Yeah, okay, I like that chart.
I like that chart too.
What's LSEG?
We like sideways. LSEG. Nothing.
Okay, so we have to go on Yahoo Finance for this garbage.
82 quarterly.
Non-GAAP covers that.
Definitely. Look at that.
PE is pretty good.
They had a special too, didn't they?
No, that's the earnings.
Okay, never mind. Never mind. PE 4%.
Yeah, let's look at their debt. Their debt went up a lot. It's like damn near doubled since COVID.
Income.
Their revenue is damn near doubled since COVID. So yeah, put it on the list.
Put it on the list. You didn't even see if it's undervalued or not. Should we double check that?
Go into
Yahoo. What the heck was the ticker for this?
UVV. Now, tobacco, if you believe that the markets are in turmoil, or like the
Is that what this is? Tobacco?
Yeah, under $100,000, like they're in a downward trajectory of the K economy. Well, tobacco is historically been something that people that are feeling financial constraints.
Oh yeah. Anybody who
Still
knows a
buy.
smoker knows we got nothing on that. And that is, oh wait, it actually has it. 78.
Yeah, I think that's high. Okay, but yeah, so like so they expect this to go up. All right.
Okay, so 78 is the target.
So I guess, but I still think that's high. I would put.
Do you want me to put it down?
60.
60.
Yeah.
Like how sometimes you're like, yeah, we'll go with this. Other times you're just not
Well,
going to go
whenever,
with it.
like, when I check on that, you want to see, like, if you have, like, 21 analysts, like, you got a pretty good average price.
How many was on that one?
One. Only one analyst covers that. And they could be right. It could be 78, but I don't think it's going to be 78 in 2026. I think 60 is a better sounding.
It makes more sense. 11.15 versus.
Now, I understand that, like, you don't normally want to take the price to earnings ratio versus the sector. I just do that so we can have apples to apples with all the different stocks. Generally, if you're interested in the UVV stock, you would actually then research what UVV's price to earnings ratio has been like the last 5 and 10 years. And you literally could just type it into Google and it'll like spit something out with the AI. But I still like to check the sector to make sure it's not
So far out of left field.
so far overvalued compared to all the other tobacco stocks.
Okay, 52.86. Right. And tobacco stocks.
Yeah. It's up top.
Tobacco.
Valuation.
I'm getting there. 19.87.
1987. 1987 was a good year.
Was it?
I was 11, so I was raising hell. 19.87. What are you doing?
You said 1987. So that's why I wrote. Okay, Verizon.
Verizon. Going to be another one that I think's on the list, but we'll double check just to.
It's actually undervalued.
I think so.
$40. Oh, yeah, that's actually. Mm-hmm.
Not charts. That chart's good, but that 1 year is You can just leave the 3-year chart up. You don't have to keep flipping.
Well, sometimes I like the one year. Whatever. LSEG. What did I say? 40? 4808?
Mm-hmm.
I feel like I should just put these in.
Yeah, you should put them in 112.69.
69?
No, yeah, I'm actually big on Verizon. Not for the whole $8 you can make in $8 that you can make in 2026 from it. I'm actually big on Verizon because they actually have invested a lot of money on 6G already. And I think 6G is like if you don't listen to the podcast, I went over like I think 6G is something that you should have your ears picked up on the radar because it's so far in the future that the markets aren't actually evaluating it in yet. But it's something that's coming. Like very few times you actually know a technological advancement's coming and it hasn't been priced into the price of the stock.
Yeah. And we were actually against Verizon for a hot second because they were, I think, lagging for something. What was it? I can't even remember.
No, I've not been. We've been in Verizon.
No, but we were talking. Unless I'm confusing that with Pfizer.
It's Pfizer.
I might be confusing that with Pfizer. Oh no, it was the fiber optics cable where it had the dip, and we talked about getting back into it.
Yeah, you bought it as soon as it dipped. Whenever everyone's like, "Oh my God, blah blah lead poisoning, blah 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 blah." I was like, "Oh my, the price is sick. Time to get into Verizon."
Okay.
Can you hear me now?
Can you hear me now? I haven't seen that guy in forever. 8.59. That's low, isn't it?
Nah, it's not.
Well, it might not be for telecoms.
It's not for telecoms.
Right.
And I do like how Schwab does this here real quick. That's EPS growth forecast, 3 to 5 years. I actually really like that.
14.75. Yes.
Because I don't feel like looking that up. So it's super nice.
Giving your hand away.
When Schwab just says, "Hey, here's the information you're looking for."
Look at these numbers. They're freaking crazy.
Look at their debt, but their debt's gone down the last 4 years.
That's surprising, actually, if they've been tech upgrading.
And their revenue's gone up the last 2.
So quickly.
Yeah, I actually really like Verizon stock.
Us too. Oh, well, that was the controversy. Was Verizon versus what's the competitor? AT&T.
AT&T and T-Mobile are the two biggest.
So I know a lot of people that have hard-ons for AT&T. 902.
Yeah. So for telecom, it's about fair value. So again, you're just getting this for a 7% yield, and then knowing that you're going to be accruing shares all throughout the time, like however many years it takes for 6G to actually become something where they're like, oh, plus the price to earnings is always in flux because it's basically the current stock price versus the projected earnings whenever you do the forward one. So that number will change.
AIO.
I know this one's overvalued, but let's
you wanted to do it, so we doing it. 2141. What's there? Whoa.
So I had a pretty 2025.
Oh, is this a
It's
closing fund? Oh God, that's 3 year.
So that's
what the hell happened there? My God.
What was the date?
May.
It was the
2025.
The tariff tantrum.
Oh wow.
Everybody thought the end of the world was coming because of tariffs. That AI was going to be basically put to the back burner until companies had money. They didn't.
NVIDIA, AVGO, Microsoft, Flex, JPM.
Anybody sold, they're crazy. That just dropped. Is that a 1? What does that say?
15 cents?
No, that.
Oh, that? 1.19?
Just dropped a huge special dividend. Holy crap.
Well, yeah, look at the pie charts, or the bar chart. Pie chart. Okay, so 1 year is saying that negative 10%. NAV, or whatever you call it, premium to discount. And the average since inception is negative 6.6.
So you can put 5% undervalued, but I still think it's overvalued. But the data says otherwise. 5% undervalued.
You want it on here?
Yeah.
5%.
Yep.
Okay.
Who might argue with the data?
Despite your spaz buddiness. All right. What do we need? Dividend 15 cents.
It's 112.15.
So many 112ers. Is that the special dividend coming up too?
No.
18.16.
8.16.
Profit margin does not count. Current price of this thing was $22.41.
22.41. You want to do your arithmetic?
Yes.
5%.
I always thought that word didn't sound right for math calculations.
I like how the Europeans call it maths.
Maths.
Gotta do my maths. So
23.53.
23.53.
Oh my. Okay. AVC. ACV. I feel like I'm dyslexic sometimes.
What you're doing? You're
I'm not good live.
You're not. Okay, let's close the fund.
Another one.
Wow, that's really good. That's a really good chart, but not for
getting in it.
Getting into something.
Getting in it, no. Not
Something
so
that you've been
much.
holding, you love that.
Right? You would love it. Inception is 2015. NVIDIA, Apple. I feel like everybody has NVIDIA, Apple, and Microsoft. Amazon, Goog.
They have actually preferred Wells Fargo. That's interesting.
The Goog.
So they dropped a special dividend of 38 cents.
38 cents?
Not near as much as the
18
other one, but
cents.
like when they drop special dividends for a closing fund, that means they have buttloads of cash.
Oodles of money. So premium discount is 4.4.
So that means you're paying 4% more for every dollar. That's severely overvalued.
And
That's
since
like
inception is -4, so that's 8% like overvalued.
yeah, I would say 10% overvalued. So that one's off the list.
Which confirms again the chart. Corroboration is always nice. Conflicting sucks. LDP. LDP. Cohen
So
Steers.
that's a preferred share income fund. So that's pretty good. Because most preferred shares have a par value of 25. So that one has potential just looking at that, but not that.
But not that. You're like, no, we're at the top.
No, I don't like to buy on charts like that. I'm sorry. That's for other people to lose money on.
So you're just gonna nix this?
No, we're gonna look it up.
Okay. And?
You have to go. It's closing the fund. To go all the way to the bottom.
-5.3 since the 1 year. Since inception is -4.37.
So that's overvalued.
So it is
as well.
overvalued by 1%. Nixie?
Nixie.
I would have just nixed it on the damn chart, but that's me. RQI.
You can't do that.
You can when there's a lot of other options.
No. You want the 10 best. It's not 10 options. You want the 10 best. Now I understand, like, for that to be accurate, you have to like go through every stock that's going ex-dividend, but
Just wondering, as a side note, MPW still have room to grow. I bought a year ago on the recommendation. Oh man, MPW. Shall we?
They said up 38%. Is that what the bottom of that said?
I bought a year ago on your recommendation, up 36%. Kudos, dude. Because we wrote it down, recouped a little bit.
MPW is, yes, there's still room to grow. But it's going to be a very volatile growth trajectory. It's going to be, some days you'll be up 2%, other days you'll be down 5%.
MPW, where we at? Yeah, we bought up here somewhere, didn't we?
So that one there, you have to do a 1 year chart.
Yeah, don't look,
that doesn't
don't look
actually
at that. Show the volatility.
So see that.
But they have gotten their tenants finally together.
Tenants squared away, and they actually sold a couple of the hospitals, so they have extra funds in the coffer.
I'm actually curious to see what their metrics are for.
So the debt, you see how the debt shrank considerably since 2021. That's like a huge difference in debt. I'll go to the income statement ones. And the revenue did turn around in 23 and 24. I think 2025 actually will be like
better
1.1 billion around there, somewhere around there.
I think they're finally starting to get their stuff together. Because MPW was actually a really good stock. Like further going back, it's mentioned in a lot of the dividend books from.
Can you scroll up to the top and just do the 5-year chart, or is it how far?
Yeah, it goes 5.
Okay.
You can do 5.
See, like this is what it was doing prior to
Right.
like all hell breaking loose. It was in the 20. It was in the
21s.
20 range. I don't think we're gonna get back there anytime soon.
Probably not, but they're gonna try. I'm pretty sure.
But I do believe that if you're in a PW, I would advise to take out your initial investment if you're up 38%, just in case, or take out part of your initial investment. So you're like, if the shit hits the fan, you're not down the full whatever you put into it. You're only down say 60% or whatever. But I do like reading through the earnings reports for NPW, because I'm always reading the earnings on this one because we've lost so much money in it.
They're saying price target of 517 for the LSEG.
That's not accurate. That's one.
Do you want me to look it up over here?
You can.
MPW.
But I don't know how many analysts actually cover it.
Right.
A lot of people say
This
that.
used to be a really, really good stock.
But I think that they are turning it around slowly. Like when I've said before, like with the Icon and with Camping World and with MPW. MPW to me has the most potential to do a quicker turnaround. So they say 517. How many people is that? 7? Yeah. So like even like all the analysts covering it say like you're about where you're going to be, but I don't. I think if I invested in MPW last year, I would have like a limit where I was just going to sell it and take my profits of like $6.50 to $7 range. But if you want to actually be in it because you believe in the long-term success of it, you could then just pull out your initial periodically throughout time, so that whenever there'll come a point in the next couple of years where you actually don't have any of your money invested in it because you've already pulled it all out, and you can just let it do what it's going to do.
That's kind of what we're trying to do, right?
I think.
Or did you turn drip back on this thing to lower our cost basis?
Well, I've had drip on forever. I don't care. I don't care. I'm just going to accumulate shares. I do believe that there, like some point in my lifetime, MPW will be at $20 again.
Oh, so that clears mud.
But if you're worried about protecting like your initial investment, I would like work on getting that out over the next 12 to 18 months, a year to year and a half. I would be trying to get my initial investment out. So like after that, it's just all whatever happens type stuff. But I like it. I like medical REITs a lot, actually, just because the
where things are going.
The population's aging a lot.
And you read in the jobs report about how
like
the
last 5 months in the jobs reports, the only like consistent variable of a sector that actually gained employment over the last five jobs reports was the medical sector. So that's corroborating what a lot of the stuff I've read and what I actually think with the population aging is as it is. We're going to come a point where we're going to be like the oldest we've ever been. We might be there, I don't know, but it's just a matter of time. And if they turn their shit around to the point where like they're collecting rent from their tenants, they had one huge tenant that fell behind on their rent, and that caused a lot of the problem. They actually restructured their rental agreements, and then they sold I think 5 of the hospitals that weren't generating any money, and they just used that to pay down debt or to put it into their free cash flow. So like they actually are structuring it up where they should be pretty good in 3 to 5 years based on all the decisions they made last year, for whatever that's worth. Okay. RQI. It's a closed-end fund. So just
RQI.
Just scroll to the bottom. Stop wasting time.
Oh, I see. Negative 3.6 on the 1 year thingy jig, and negative 6.36.
Overvalued. Nix it. Overvalued. We gotta expedite this shit.
I love how many close-ended funds we have on here. DLY.
It's another close-ended fund. Well, like you just go.
Stop adding them on the list.
But you just go.
Yeah, you go with where it goes.
Where the data's at, like where
it goes. Okay. Bottom. I didn't like that chart. Negative 5.95 for the 1 year. Negative 4.46.
Yeah, so this one can go on the list. Scroll up to the top now. Now you can go through all that crap you're doing.
It can go on the list.
The chart is.
I don't like that chart though.
Ass. But that's because bonds had a pretty rough time. You can see right there where bonds were doing pretty sick, and then like the interest rates started going down, and then the bonds went down. That's a prime example.
Which is why we got back into them.
Yeah, because
14.79.
everyone's getting out of them, so I'm gonna buy them. Like my play for bonds. I know a lot of people really like DSL and DLY, but I just like PDI. I like the PEMCO ones. I like PDI a lot. Mm-hmm. We also have we had DSU for a couple years. We made a lot of money on that.
Did you do 11 or 12 cents there?
12.
Okay.
But we actually haven't got back into DSU yet. Make happen, and then I actually have YYY, which is a closed-ended fund conglomerate. I guess they buy they buy closed-ended fund shares, so it's kind of like bonds, but it's not the same. But like YYY and PDI, if you just do those two there, you have so much diversification.
I'm looking for the freaking ex-div date because it wasn't over there.
DLY, it's 114.
Oh, we're DLY? My bad. 114?
Yeah.
Give me crap. I actually know what I'm doing sometimes.
Do you?
How much undervalued was this?
It's like
it wasn't very much, though, was it?
5%. Just do 5%. I just do 5%. If it's like around there, I do 5%. But this time, because it's so close, it's not going to be. It's going to be like 15.25.
You want me to do just 15?
Just do 15.25. The reason we did that and we didn't do the 5% that way because if you scroll on the bottom, you saw it was like between 1% and 2% undervalued. Mm-hmm. But we like to have the wiggle room. That's why I put the 5%. But we know it's like that's the max. Actually, the max that you can pay is 15.63. But you're not going to pay that, so it's going to be 15.25.
Okay. That one probably won't be high on the list regardless, right?
Probably not.
Probably not. If it's even on the list after you sort it down to 10, because there's better ones on here. which is why I would have just nixed it.
Now, here's another area where I think 2026 is going to be quite lucrative, and that's the mortgage real estate investment trust, the MREITs, the ones that hold paper. This one's awesome. Like, look at how sideways that's been for years.
I guess after you get over that humpy thing, but yeah.
LSEG says what on this one?
LSEG says 17.5.
1750, so it's overvalued.
So it's overvalued.
According to that. So go into Yahoo Finance real quick to verify that.
Yahoo! What was the ticker on this thing? ARR.
It's the pirate one.
The pirate.
I really like medical REITs, so not medical REITs, but I really like mortgage REITs.
Well, because this also goes in with the macroeconomics for 2026. And we have projected negative.
Negative growth, but it's not as bad as last year, so that's good.
But it's not as bad as last year. 17. Interesting. Also 1750. How many?
6. Okay, so that one's overvalued.
You gonna nix it?
Yep.
Whoa. The numbers say the numbers say.
Numbers say what the numbers say. I would get into it, but the numbers say what the numbers say. I'm not going to recommend it to other people.
At least you have some conscience.
This is one that actually the van lifers actually asked about, and I said I researched this one last year, so We'll see if it changed since then.
What is buckle?
That chart's pretty good.
Okay, 55 price target.
55.89. Still fucking overvalued, I think.
Should we double check?
Yeah.
BKE.
Always double check. We do this so you guys don't have to.
Right, exactly.
So when that list comes out, I'm telling you, when the list comes out, if you subscribe to emails, like when that list comes out, like it's been pretty thoroughly vetted, so you can just plug and play.
All right, what do we got? We got not very much growth on that part.
Not very much growth at all.
Analysis insights.
55.
55.
Okay.
Nixing?
Overvalued.
Boom.
Not worth the. You're only getting like a 3 to 4% dividend.
CSWC.
This one's. I know it's on the list, so you can just plug it in whenever you.
All right. CEFS as a closed-ended fund on your radar. CEFS.
Closed-ended fund.
Well, not that rare. What is CESF? Did I do the CESF? FS?
It was CEF. It was closed-ended fund. I think what they're asking.
Oh.
Are you asking CEFS or closed-ended funds?
Let's see if it's an actual ticker.
It is a ticker.
He's probably asking. How about this one? Saba. It's a different. Do I have? Is this not supposed to be here?
Yeah, exactly.
Okay. I was gonna say that doesn't even look right. All right. Holy hell.
There's a lot of growth on that one.
If you got in that one before, kudos. What we doing? I would have loved to get in down here.
That's what you tried to do.
Oh my god, the tariff tantrum literally just has like.
So like, scroll to the bottom.
The hair thing. I don't know what. Just so fast. 13%, 0.13. Oh my god, 0.13. And the average is 0.45. So technically undervalued
it's
for
a
that.
little bit undervalued. Go up to the dividend. Now that's going to be like one of those gray areas, okay? Because it's a little bit undervalued, but like it's like we're talking 0.2, 0.3%. So at that point you have to make the determination: is that 7.74% yield enough cushion or enough for you to actually invest? Because there's probably a high probability that this is going to go down in the next month or two because it's so close to its median, its average. I would think if you wanted to get into this, I would wait. I would just put my cash into like THTA, or SBAR, which are basically they hold treasuries and do options and stuff like that, where it's pretty safe-ish. And I would just wait for like, I bet you could probably get into this one $21 in the next 2 months. But that's my opinion. CSCW.
CSCW?
I think, or CSWC. No, CSWC.
Damn.
I know this one, so just literally just start
Southwest
plugging.
Water Closet.
Just
start plugging.
Plug
2279. Look at that chart.
I know it's fun. I know it's one. So
you know it's one.
There's certain stocks that I just know.
2336.
2336.
You're so funny. You cracking me up.
We were in this for a while, so I still monitor this one.
January 15th.
1:15, 19, 11:25.
1:15, 19.
19, 11:25.
There you go. Should always help me with numbers. It goes faster.
Well, since when do you care about going fast? 94.
Is that a monthly? So 20 cents times, that just barely covers it, right?
19 and 19 is 38, 48. So it'd be 57.
So I'd be right on.
Yeah.
Okay.
Most
PE 4.98.
most BDCs are going to be like within a penny or two of that.
Okay. GTK. I'm just being whatever, thorough. 39.98. Ooh.
It's BDC, but you actually want to look at the net interest income. But because we do the chart the way we do the chart, just for a quick
Apple to apple?
yeah, debt's increased a little bit. That's not good, but revenue has increased as well, so it is what it is. It's fine. So the BDCs is about 24, 25-ish on the sector for the price to earnings.
You know that off the top of your head?
No,
God damn it.
just guessing.
I hate auto pop-ups. 2403.
Yeah, 24, 25. I was pretty close.
You were. Shows you do this quite
24.
frequently.
Yeah. So that one, yeah, I just know that one. Now we're gonna look at one that everyone always talks about. And
Yeah, the ticker.
okay,
So we want that. Okay.
CLM's trash, but put it in.
CLM. Trash.
Just absolute trash. This is one of the ones you have to make a determination. Is the 17% yield going to cover your loss? Is basically what this one is.
Okay. 8.46. So I'm not putting any of this in. The chart's not terrible, though. Sideways is always good.
Sideways is always good.
So, the
It
heavy
holds-
hitters.
It holds good
Also
stuff.
good stocks.
So it's 17.32% yield. So that's good. It's a 17% yield. So that's good.
12 cent. And then down here. 24. What?
That is why it's trash.
24.93%. Jesus. Premium to discount?
Yes.
It's 7.24. So that's like.
People that buy CLM are paying they're paying $1.25 for a dollar's worth of NAV.
That's
Now,
loco.
That's one you really, really have to be diligent about. Like anytime if you find a closed-ended fund that is above par, like it has a premium, you have to do your due diligence hardcore on that one to make sure you're not overpaying, because you're already overpaying to begin with. So why
Right. Why take that
complicate
risk?
it?
I did. It was GGT, right? Gabelli? Yeah, Gabelli. 4.22 penny stock.
Oh, look at that, penny stock. This is right up my alley.
I knew you were gonna say that. Closed-ended fund. Sony.
Hold some good
Netflix.
stuff.
Yeah, it does. NT Doi.
So this is 21%
Whoa.
distribution. So let's
7. Oh yeah. 9.14. Premium to discount. There's a lot of closed-ended funds going on right now.
Yeah.
And the average is negative 3.5.
So that now here's one. Okay, I'm gonna blow some people's mind. If I was doing this and I wasn't making a list for you all, I probably would put a couple $100 into this, just because if you take the 9.14 plus the 3.15, it's 12%, and it has a 21% yield. So you're making 9% if it just traded sideways. Which if you go back up to the chart, it looks like it's pretty much traded sideways for a hot minute.
Yeah, because if you go to the 1 year, right? It's after this trough.
See what I'm saying? There's a possibility you can get into something that's dirt cheap, where you can get a shit ton of shares and make 9 to 10%, even though the price probably will depreciate.
But you don't put a lot into it. You just take the flyer, right?
Yeah, but that's just me. It's off the list. But that's just me. Like
Being you.
when we first started, I would actually put $10,000 into that. So I learned through time not to put $10,000 into shit like that. I only put $1,000 into it, or $500.
10,000.
Yeah.
When was this? You didn't tell me about it?
We were in CRF and CLM both.
Oh my god. 7.75. Look at that chart.
That chart's rough.
Oh man.
Did you see?
Kudos to whoever the hell was down
Did
here.
you see what this one is, though?
No. What was it? Derivative income.
It's a gold or gold closing fund.
Oh, that's why I recognize that ticker.
We got into this.
We did, didn't we?
Yeah.
Exam.
Yeah, I like this one. I just couldn't put more into it because it went up too quickly.
Right.
So it's 7%.
Negative 8.49, and the since inception is negative 7.0, so it's overvalued.
Yeah. So this one's about 5%, but we know it's actually 1.5%. So this one I would put at like a $8. Where'd you go? It's not. It's undervalued.
Oh, it wasn't? Did I go backwards?
Yeah.
Oh yeah, I did go backwards. Sorry.
So it's like
what?
It's like 1.5. So it's like 5% undervalued. But we'll.
You and your 5%.
Well, you can't say 1%. That's stupid.
Oh shit. And you want it to be that price? 8.36?
No.
Okay.
I do not want it to be 8.36. It's 7.75. I wouldn't go above 8. But it doesn't really do a lot of movement.
Yeah, it does. It's like shooting up
day to day. So you should.
Oh, that's why, because gold freaking took off its face.
Yeah.
Yeah.
And I think gold's going to pull back a little bit before it shoots up again. So you can actually get into this probably at 750 to 740, 740 to 750 range, and still get your 7% yield. Now this is our way as people that live in a van of holding gold without holding gold. We just invest in gold, it's closed-ended funds. That way we don't actually have to carry around stupid gold bars and get robbed and shit like that.
Yeah. Way down that gas mileage. No, thank you. Joff. This is the one you were interested in.
Now, this one here actually piqued my mind.
Joffy.
Picked my brain sock.
Picked your brain?
My brain sock.
Picked your brain sock.
Wouldn't it go? What is it?
It is a thing. Oh, don't get...
Japan's smaller capitalization. Go over there.
Japan
The investment
piques me.
objective of the fund is long-term capital appreciation through investments in Japanese smaller capitalization companies. Oh, I'm intrigued.
I was intrigued with Japan.
I'm intrigued. So this is a Japan small cap. All right.
Fukuoka Sapporo. Ooh, Sapporo.
They have good sushi.
Right. Look at that. This is like the gold trender.
I have a feeling this is overvalued.
Yeah. Yeah. Good for them, though.
I have a feeling it's overvalued. I don't know why you just scroll to the bottom. It's closing the
Oh my
font.
god, I'm looking at other things.
Don't. We have...
0.859, negative 0.859, and since inception, it is negative 4.71.
Yeah, so that's like damn near 10% overvalued, but this is only 4% of the chart that's overvalued. That one mixed. Now here's one of our better returns that we've actually made.
NBXG.
We've made like 100% on this one. We'll show you why here in a second.
NBXG.
We were working on a car today. That's why my hands look like I was playing in dirt.
All beat up. Furnaces and cars.
Yeah, like a lot of people don't even do this one. I don't know why. They do a JEPQ or JEPI.
Is this overvalued?
Or QYLD. Probably.
Alright, so we have another.
But it holds like all the big wigs.
All the big wigs.
It yields, when we got into it, it yielded 13%, so that's how much it's went up in price. It's down to 8.5%.
Mm-hmm. And down here, we have negative 12.4 for the premium discount and negative 13.81.
So that is, yeah, it's a little bit overvalued.
Mm-hmm.
So it's off the list, but I love that one. Damn it.
Do we have that one?
Yeah, we've been in that for years.
Did you get your initial out yet?
Yes.
Nice. PGZ.
I'm working on the retirement account, getting the initials out, but it's like we're getting like $100 and some dollars, or no, we're getting $60 a month in dividends, so it's very difficult to.
Principal real estate income.
Now, real estate. It depends how you feel about real estate. That's why I put this one on the list.
Depends on what sector. That's a nice chart.
Yeah, this one's probably
Straight sideways.
or fair valued.
Another close-ended. Jesus.
It's a lot of closed-ended funds. I can't.
Yeah, I know. Can't help what comes out.
Can't help but.
So 10-cent dividend, 12.55%. And 1107, negative 1107. Premium discount, negative 1149.
So that's fair valued. Yeah, that's okay.
Okay, what?
No, it's fair valued.
What's that mean?
Put it on the list.
Put it on the list?
Yeah.
That's all you had to say. 0%?
It's fair valued.
Okay.
But we know that it should be. So
So is that 11 cents?
Yeah, 115, 11 cents. Because whenever you put it into anything, it rounds it up. Except for your brokerage account. It gives you like to the fucking nano cent how much the dividend is. It's like it's point one zero five two.
So true. It does. It so does.
And I see like how that one was just a slightly over. Technically, it was slightly overvalued, but it has a 13% yield, and real estate's going to do what real estate does.
Yeah, right. So because of the sector, macroeconomics.
So I would do the fair value of 10.25. You could probably get this for like $9 to $9.50 in like 6 months, but in the meantime, you're missing out on the potential
Yields. And it's monthly.
Potential drip on that one. And we were just in this one. Now this is one I know is on the list, so just put it in.
1467. Ooh.
Yeah. This one didn't do quite well. This one just came out in I think I want to say like October, maybe August. I forget when it came out, but it's relatively new.
It says July back here. 2024.
No, that's when it went. That's not accurate. It literally just came out.
It says July.
Okay, so it was July 24, whatever. It just came out. That's brand new.
Okay. You mean it's a baby? A couple years.
And it did pretty good there. So like, let's see, the first half it was trading in it's trading in its range. So that was a good time to be in it, which we were. But then it started just going down because of earnings, because like the earnings like of a new stock actually caught up to it. And it's like, oh, this is garbage. But I know it has a yield that's crazy.
Oh, I went to the wrong thing. Jesus. The yield's crazy.
The yield is crazy.
21.23.
Crazy. The yield is crazy. And this is a monthly pair. $0.25 a month. What do you?
Huh?
Where'd you go? You just went down to the bottom for no reason.
I did, but isn't it like a thingy-jig?
No, it's a stock.
Oh. I did not realize that. So where the hell?
So this one here, you like this one with
SPMC.
SPMC. Basically, what you're doing is you're hoping that the 21% yield covers any like losses that you'll have until it gets its footing, because it only has like 2 or 3 earnings reports.
So this is another one that Tim would do some crazy whatevers.
I did until I found a better one. I was like, oh, okay. Remember, I don't know if did we talk about MSIF last week? I don't know if it was last week or the week before, but that one, like Main Street Capital, which is like probably the creme de la creme of BDCs, they actually have a new fund, MSIF, that's 6 months old or something like that.
What is it? Capital Markets Average PE?
Just click on it.
I did. It said it's not available.
We did it before. Okay, so go back up to our chart. CSWC is the same. It says 2403.
Oh, okay. That's all you had to say. That's really undervalued.
Because it's a baby that
a baby
doesn't have a lot of data behind it. Like, it's very volatile. Mm-hmm. So you're hoping the 21% yield covers any potential losses. But like, I think if you have patience, you could probably, I don't know, make 25% on this within 12 months. Because the yield's 21%, I could see a 4% price appreciation. Now, this is probably the one that we've made the most money on. Like, of all the stocks that we've made a lot of money on, other than Nvidia and Palantir and like our growth stocks, like our dividend, like the core holding of dividend stocks, this is the one we've made just absolute.
So much money.
So much money.
We've had to take money off the table so many times.
We're like 240% up on this one. Because we got it for $7.
Jesus.
This is back, where was it? It was that the 5-year? Do the 5-year.
How long have we had those?
Forever.
Oh, bad.
Okay, $8. It was around this time here.
You got in down at this bottom hole.
Yeah.
Look at that.
So we've had it for years. I basically.
That's not even like a crazy upswing. That's like a creeper.
Basically, perfectly timed the low on this one, which I can't.
Rarely happens.
Which I could probably never duplicate, but
right.
I mean, I did it with Verizon and the retirement account. I pretty much got it at like $28, and it went down, I think, to 27 something, and then it started shooting up.
So 17 cents.
17 cents a month, and this one
times 52.
So it'd be 51.
Well, because I can't do math like you can. Judge me.
So you know it's on the list.
I know it's on the list. I was just double checking.
This is the best. I can't. If you listen to the podcast, we always just glaze this one. I just learned that word.
What's glaze?
It means you basically like suck a stick, glaze it. So we glaze Trinity Capital all the time because it's just so good.
Slob. Oh my god, that's hilarious. Where was that number at? Where the hell's the freaking number? Oh, I'm up here. 15th again. 13th.
But this one, like only word of caution in Trinity Capital is it just went from quarterly dividends to this year. It looked brand new as it's 17 cents a month dividend. I don't know why they're doing that. I guess they feel better about it. I don't know, but I don't know how it's going to respond to that.
Capital markets again, so that should be the 2403.
You forgot the profit margin.
Damn it. I knew I was looking for something at the bottom. You're like, don't scroll to the bottom of the regular stocks.
You just keep going back and forth like an ADHD child.
It's because I'm like, oh, wait, I'm supposed to do this. Oh, wait, I'm not supposed to do this. 50.49. I got it. Maybe you should do this. And I can just sit here like a...
Well, we don't need you then. You can go do something else.
I think that's what I'm trying to do. I'm trying to sabotage it.
But that's like I would if you were getting into Trinity right now, if you're not in it, I would only put like maybe 1 or 2% of your portfolio limit into it, like so 500, 1,000, whatever your portfolio size is. I wouldn't do more than 2% until we can get verification that the monthly dividend is not going to like adversely impact it, because that's a huge,
because there is a trend for most stuff going monthly and then the weekly thing, so there's pressure and we don't know if the companies can actually handle the switch, even though it's where things are going.
Now this
it's
one
following sentiment
just went down a lot.
30 down 35.
I wonder if you go to 1 year chart. I wonder if you were paying attention whenever I typed stuff up, why it went down so much. See how it went, just like collapsed there in April, but then it rebounded and then it just shot the fuck straight down.
Mm-hmm. What happened? Tariff tantrum?
They offered more shares.
Oh.
So they actually diluted the share pool with like offering.
And they're not supposed to do that with these, right? Closing a fund?
But they can if they just.
They can, but
if they offer them to the shareholders, they can't just arbitrarily say, "Hey, we need more money, so we're going."
So they did one of those.
Yeah, so you got like I think one for one or something like that, but you couldn't get more than like 17% of what you own or some shit like that.
So is this even accurate? Negative 1.1 premium to discount. Versus...
It's undervalued. It's like 5% undervalued.
So we putting it on here?
Yeah. It's still a good company and it holds all the good shit.
5%.
It's just like your power got shrank whenever they added more shares to the pool.
45, 13.75.
Just had a huge special dividend, like $2 and some cents, or whatever the hell that was.
Really?
Yeah.
Did I miss that?
Apparently.
Obviously. Holy crap balls.
Yeah, I got a huge end of the year present with this one, so that was nice. So,
kudos for whoever the hell was in that.
We've been in it for years. The retirement account,
kudos to us.
The van life account, and the F&A are both in it as well. I have everybody in it because it's a closed-ended funds that holds like all the energy MLPs.
Ah, there it is.
40. We've been in it so long that I know it's undervalued at 40. Like if you get in under 40, it's gonna be at like 42, 43. And this is one of the ones that's not really been too impacted by the price of oil going down too much, because they own a lot of the midstream, so it doesn't matter what the price of oil is. They're just transporting and storing oil, so it's like whatever. They have EPD, they have Hess, they have I think ExxonMobil, they have like all the shit. Now this one. This is another one of those ones where you look at it and be like, well, that chart's horrible.
Well, it's just the last year.
The chart's absolutely terrible. But you look at even when it was at its high, it was at 24.
25.
Like, it was 25 a couple of years ago, and it dropped down. And you're down 50% in like the last 2 years.
Oh, so this is like a.
But there's a but. Go down to the dividend.
What?
You're making 32% a year, so you've actually made more than 50% in dividend per yield. So this is one that you still make money on, even though
what the hell?
It's so horrible.
But they are like lowering their dividends. They obviously have to if the price is dropping that ridiculous. Yeah. Still.
This is one of those like this is
Negative
one of those like this is
9.
like why people like when I read things and they always like talk shit on high yield.
Are you kidding me? Since inception, average is 35, and this is negative 9.
It's 10% undervalued. It's
No.
like people like well, I know a lot of the experts and a lot of the YouTubers and all them will like say high yield. They'll just talk shit on high yields, but like if you approach it as an equation, like okay, if I'm going to lose 15%, but I'm making 32%. I'm actually up 17%, and that's one of the like the only way that you lose money the whole way down is if you drip it back in and you just accumulate more shares as it goes down. If you just take the cash,
Yeah, take the cash.
you're
Because this is
making-
kind of like a yield maxer.
Yeah.
Like a high yield ETF. Okay, so the current price of this honky, 15.12.
$14.95 is what it is. You're putting the wrong number in if you put that in. 16. And they just did a reverse stock split too. It used to be like $2 or $3, whatever.
This is even worse. PDCC.
Yeah.
That's probably because people are freaking dripping shares, just like the same problem with yield maxes.
Yeah. So I would like
Tony, reverse stock split.
anything over 20%. Like you have to have like a very good reason to actually drip the shares back in. Otherwise, if you just take your cash out, you're like within like 4 or 5 years time, you're gonna have your initial investment out. So
I really think they shouldn't be allowed to do drip shares on stocks like that.
okay, this one I think
Pearl Driver.
be on the list as well. But
You do?
I think it is.
Is this another freaking...
No, it's a stock.
Oh, so LSEG.
It's a closed-ended fund.
18.5?
I'm sorry, it's a
14.
It's a BDC.
14.7. No, did I look at the wrong number again? 14.34. What did I say? 18.
I mean, I enjoy this. I hope that other people actually watching this enjoy it. Like they actually can like
They enjoy this.
figure out like because that chart looks
yeah.
absolutely fucking terrible. Why would you ever even invest in this? That chart's god awful.
But again, if the yield's high enough, like you just said with the last one, yeah, Jesus God. LSEG 18.5.
But if you approach it as like a math equation and you're making
Yeah, that's valid.
17 or 18 or 20% and you're losing 12 or 15, you're still good. That's another huge fucking yield. Look at that.
18.41.
Yeah. So we got some bangers on this. So that's why I told you guys last week if you had cash and you weren't liking that list to hold on to the cash because you're going to be able to get some bangers. I could just tell when we pulled it up. There's certain ones that. The only problem with this one is you don't really get a lot of data on, so you actually have to go Google shit.
So
but like,
profit margin's not there.
I just put NA for the profit margin because I'm not going to lie. The revenue's like.
We're not going to go look it up?
No, it's not there.
Oh, you know that?
Yeah.
NA. I like NA.
And the 4P is 11. Scroll down.
Oh, 11.38.
11.38 to the 24.03. So there's like 4 or 5 BDCs on this list, but generally, like in the current
24.03, you mean?
Yeah, generally in the current market,
Okay.
BDCs are super undervalued because of interest rates and all that crap. So
Do your magic, homeboy.
all right, so now we got to make a list of 10. So we have to figure out.
Move.
You're taking my space.
Oh, boy.
We have to figure out what we got here. So we have.
Do your magic. You can make that smaller if you need to.
4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So I got to get rid of 14 of them.
You mean 4?
4 of them, yeah. So we can get rid of that.
If you were to 14, delete the whole chart.
We can get rid of that one. Also,
Because fair value.
fair value.
Yeah, okay. Deletes.
Get rid of, I like that one, but I don't like this one. The reason I'm going to delete this one.
Yep.
It only yields 6%. It only has 4% profit margins, and there's better yields out here to be had with better numbers. So that one's gone. UEV.
So that was 2?
2. And this one I'll probably get rid of too because I don't know what this is.
That's a risk not willing to
So
take?
yeah, that's a risk that I'm not willing to take when the list is that good. 1, 2, 3, 4, 5, 6, So I have to get rid of one more. This one, even though I really like this one and I think gold's going to be good, it's like just based on this. I don't know. Hold on, the gold versus.
Could you add that as a bonus one because gold's in its own weird sector?
I think I'm going to do this one. I got rid of the AI one because of the volatility and the minimal appreciation. Okay, so now we know you're going right to the top.
Trinity.
And you're going right to the second. I like these large numbers here.
Yeah, big profit margins mean that chance of dividends going up.
With these, well, they can cover the dividend.
They can cover the dividend, but they also could increase it as opposed to decreasing it. It's way less of a chance of decreasing it, especially if there's a bump in the market, which we had said going into 2026 that we actually think it's going to have a massive pullback at some point, right?
Yeah, I do. It's going to, based on
election year,
historical data, it's going to have a massive pullback.
Primaries or whatever you said. I forget what the heck you called it. I don't pay attention to politics. Primaries? Yeah, that. The P word.
So that's it. Yep, there it is. There's your list for this week.
Boom. So?
Obviously, I'm not putting those in order like one's the best, 10's the worst. I'm just putting it in the order of if I was investing, I would start at 1, Trinity, and I would work down. But then if I put money into Trinity, I wouldn't put money into Capital Southwest right below it because that would be all my money into 2 BDCs.
2 BDCs. Right.
And I like we got some diversification. We have emerging market, we have MLP, we have bond, we have gold, we have bank loan, and we have whatever ERH is. I forget what ERH is.
No, I don't know either. Something, but
so there's even if you wanted to, you could literally.
That might be a bond one.
You could put equal money into the closed-ended funds. They're all undervalued, and they give you a pretty good yield, and you have a diversification across a lot of different areas. So that's what I would do. And Verizon is just awesome. So there you go. There's that list. We'll be back next week with next week's list. I mean, we can pull up the chart real quick and just do the next week so I can see
what's coming.
What's coming? So
down
people want to watch.
The pipeline.
It's the 17th to the 24th. There you go. You got it.
I'm getting better, kind of. Maybe. Not. Oh, only one for the Monday. LTC. PFE.
Yeah, so if you have money, I put it into this week's because next week's looks kind of thin.
So for those of you who have pay weeks, bi-weekly pay,
kind of thin. I think this week's list is going to be far superior to what I'm seeing on what's
coming up next
obviously
week.
This is going to change between now and then because the more earnings things they come out with announcements, but
right.
This is the ones this week are way better than what I'm seeing.
All right, so FYI peeps.
So we'll see you next week. Check see if anyone has any questions before we leave.
I just did. We're good.
Good.
Very nice.
If you have any other questions, just type them in and we'll answer them before we start.
Yeah,
next week.
If you're rewatching this, just go ahead and drop them in the comments, and we'll check that before next week's. Or if it's relevant to other stuff, we might talk about it on the podcast.
Do my princess wave. Bye. Come again.
You're so weird.
Bye.
All right, Tim.